Hey everyone, welcome to my channel and welcome back to my subscribers. I'm getting more and more concerned about 2023 and beyond, and I have put together some data and some news stories I want to share with you all to show you exactly why I'm taking the opportunity right now to buy more gold and silver. Please watch this video through to the very end because this is a very special message, especially to those of you who, number one, do not have any exposure yet to silver or gold and are considering buying some, and number two, to more seasoned stackers as a guide of what to expect in the coming years, especially in 2023. So the first thing that I am becoming concerned about is inflation. While a lot of talking heads out there on TV are saying it's all behind us, citing data like this from Truflation showing inflation on the decline, there is one specific thing they are forgetting to look at that is a very strong signal that inflation is going to come back, and that is this. This is the DXY index, and my regular viewers know this shows the strength of the US dollar versus other foreign currencies. And it is currently on the decline. As a result, the US dollar can buy less today than it did, for example, back in September when this index peaked. And I have added the dollar to British pound exchange rate as a reference to show you just how important this chart is and just how much the US dollar's purchasing power has declined internationally as a result of this data. Because if we take a look at the same inflation data for the United Kingdom as we looked at for the USA a moment ago, we see inflation spiking and potentially peaking near 20%. And why this is important is because it tells us that the prices people pay in the market are at least 3 to 6 months lagging behind the data I showed you in the DXY index. And the reason for that is the supply chain. Now, since the US dollar is weakening versus other foreign currencies, what that means is imports are becoming more expensive on new orders being placed. And non-dollar purchasing power is increasing, meaning that there will be more competition for purchasing American goods as they become relatively cheaper for people buying in other currencies. What that will likely result in, probably around March 2023, is a higher inflation number in the United States versus what experts are projecting today. And that has consequences for people all around the world because as it stands today, the market is pricing in a shift in Federal Reserve policy, and the assumption that many well-known investors out there are making is that the Federal Reserve will stop raising rates and stop tightening as of March 2023. Now, I'm not saying that won't happen. What I am saying is that it has the potential to cause more Fed hawkishness should those inflation numbers come in higher than expected, which is something that the data is clearly showing us that it should. So, what that will result in is a desire on the Federal Reserve side to continue raising rates. And that could severely disrupt a very fragile economy, causing equities, so the stock markets, to come down even further than they are right now, forcing more people to seek safe haven in metals, which are now outperforming basically every major stock. As you can see here, with gold and silver having made big gains versus their stock market rivals in 2022 year to date. But sustained inflation is not the only reason I am increasing my gold and silver purchases right now. If you remember this was the timeline I presented on May 14th of this year, saying that at some time in Q4 2022, China would return to normal. And the fact is, they are starting to move in that direction now. This, in turn, will ease restrictions on manufacturers, restrictions associated with C-19 protocols, as well as release a lot of pent-up demand from the Chinese consumer who hasn't been buying much over the last 2 years because, well, basically many of them have been out of work and a lot of them have had to stay at home. And this increase in production, as well as increase in demand from Chinese consumers themselves, will create an increase in demand for materials needed to build things like electronics, for example. And that could happen as soon as Q2 2023, in line with this model that I've been showing you. And it seems I'm not alone in making that assumption, because just this week, energy expert Dan Yergin said oil, another major component of Chinese manufacturing and economic activity, could shoot up to as high as $121 a barrel once China fully reopens, which clearly shows how China has the power to assert price pressure on very crucial commodities like oil and silver. And going back to the first point that I made, how inflation is not something that is going to disappear anytime soon. Now, the last reason I am stacking up on gold and silver is because of this. Now, I know you've heard the CBDC thing a million times now, but my message is different because I don't believe in the doom and gloom narrative, end of times, whatever it is you call it. I have proven to be a pretty level-headed person on this channel since I started it in 2021, but these central bank digital currencies are coming. They are literally right around the corner, and they will be rolled out everywhere from the USA to Europe to India and beyond, and it's already being rolled out in China right now. And guess what? They're coming with potential expiry dates in the 2 largest countries in the world, and possibly beyond. Because if they can force you to spend, you can't save. And if you can't save, you stay poor. And if you're poor, you remain obedient and work. And if you remain obedient and work, you are no threat to people who have power in this world. And this is where the beyond 2023 part of my message comes in. If things like this are coming, things that will prevent people's ability to save, they will realize it, especially in countries like India, where having savings in gold is has, I should say, a very long tradition. And my thesis is, as this starts to materialize, more people are going to turn to gold and silver, amongst other things, not only for the freedom it brings, but for the ability to protect the value of their labor against a government that could double the money supply at the push of a button with these CBDCs, and also because gold and silver don't have expiry dates. So this month I am buying gold and silver, and I'm going to buy more than I usually do because I am concerned. Moving on to this episode's viewer question, and it ties in very well to our topic. It comes from Ahmed Karim, and he asks, what do you think about gold prices? As per the charts, they are almost at an all-time high. Will we see a dump soon? So thank you for your question, Ahmed. And although it is true that we are not far from the all-time high on gold, we are currently in an uptrend on the chart you see here and still making higher highs since making a triple bottom around the $1,625 per ounce level in November and October. I currently see the support line around $1,737 per ounce, and I am not personally concerned about a dump until we break below that price level. And let me be clear here, I'm talking about a significant price dump. So thanks a lot for the question, Ahmed. All the best to you. Now, before I finish, if you liked this video and you are concerned that you do not have enough gold and silver stacked up to face the coming issues that I've mentioned, I want you to please click on this link right now. In this video, I outlined a good stacking target for beginners, as well as a timeline on how to reach that target responsibly. Because you should never put more money than you can afford in any investment. And that includes protecting yourself against economic uncertainty with metals. And it also includes borrowing money, okay? Metals are for saving money you have without having to worry about paying your bills or buying groceries. With that, I wish you all the best, and I hope to see you in the next one. And until then, goodbye.